Hello, crypto friends. Let's be real. 90% of the people watching this video right now were terrified in early February. Bitcoin was dumping, portfolios were bleeding red, and the YouTube gurus were screaming, "It's over. Sell everything before it goes to zero." But if you are subscribed to this channel, you didn't panic. You were smiling. Remember my last video? I gave you one single level, not a range, not a maybe somewhere around here, but an exact number, 8 cents. They wrote to me, "You're crazy. HBAR is going to 5 cents. Dead project." Well, what do we see today? The market wicked down exactly to 0.077, filled our limit orders, and rocketed up. We are already up 25%. While the crowd is capitulating, we are printing profits. Congratulations, you are the elite. But this is not the time to get comfortable. What I'm about to tell you today will either make you rich in 2026 or leave you empty-handed. Have we seen the bottom? Or is this a bull trap before the mega crash? I have prepared the most comprehensive Hedera breakdown on the internet. We will compare HBAR versus Solana versus Ethereum. I'll show you farming strategies yielding 40% APY right now. And we will crack open the private BlackRock report. Put your phones away, grab a notebook. The next 12 minutes will change how you see the market. Let's go! To understand where HBAR is going, you need to lift your head from the charts and look at the world. 2026 started with turbulence. The Fed is hinting at hawkishness again. The stock market is shaky. In moments like this, smart money splits assets into two piles: risk, meme coins, gaming tokens, and quality, infrastructure. Why did HBAR hold up better than the rest during the dump? Because Hedera has graduated into the quality asset class. When a pension fund or a bank wants to enter crypto, they don't buy peep or bunk. They don't care about hype. They need three things. Hedera has never had issues with the SEC. A business cannot scale if transaction fees are 1 today and 50 tomorrow, like Ethereum. Hedera is fixed at 0.0001. Google, IBM, Boeing, Repsol. These aren't just logos on a website. They are the guarantee that the network won't just be switched off. In February, we witnessed the great rotation of capital. Money is fleeing speculative bubbles and parking in infrastructure. That's why we saw that bounce at 8 cents. That wasn't retail traders. That was institutional algorithms programmed to buy undervalued infrastructure. Let's dig deeper into Canary Capital. I touched on this before, but there's a second layer here. You know they hold 532 million HBAR, but do you know where those coins came from? On-chain analysis shows that a huge chunk of these coins wasn't bought on Binance. They were transferred via OTC, over-the-counter, deals from early validators. What does this mean? It means the exchange supply is being artificially drained. Liquidity in the order books is drying up. This creates a spring effect. When retail buyers finally arrive, they will have to push the price up aggressively to fill their bags because the wholesale supply is gone. Canary has it all. Many forgot the news from last year about tokenizing BlackRock's money market fund, ICS, via Archax on Hedera. But let's look at the numbers for February 2026. The volume of tokenized assets on Hedera has crossed 1 billion. These aren't test pilots. This is real money from high net worth clients living on the Hashgraph. Every fund share transfer is a transaction. Every dividend payout is a transaction. BlackRock has quietly chosen Hedera as a primary rail for RWA real-world assets. They just aren't shouting about it on Twitter because they want to accumulate quietly. I often get asked in the comments, why HBAR if Solana exists? Solana moves faster. Let's compare them honestly. No fanboyism, just investing. Solana, massive hype, meme coin mania, retail love. network instability under peak load, high inflation, paying validators with new issuance. Verdict: it's a casino. You can get rich quick or lose it all in seconds. Ethereum, massive liquidity, industry standard, technologically aging. Two solutions, Arbitrum, optimism, are fragmenting liquidity. Verdict: it's an old reliable bank, but it's slow and expensive. Don't expect a 20x here. Hedera, ABFT consensus, mathematically proven security, 3,000 plus real TPS. Honest deflationary model fees cover costs. Killer feature, fair ordering. Hedera has no MEV bots stealing your money by front-running your trades. For institutions, this is non-negotiable. Verdict: this is Amazon. At first, they built warehouses, infrastructure, and nobody cared. Now they own the logistics market. In 2026, capital seeks efficiency. Hedera is the most efficient network on the planet, period. Where to make money? Okay, you bought HBAR. What now? Just let it rot in your wallet? In 2026, that is a mistake. Your money must work. Let's break down the best DeFi strategies on Hedera right now. Strategy 1. Conservative saucer swap. Go to saucer swap V2. Look for the HBA USDC pool. Right now, it's paying around 12-15% APR. This is excellent for a bear market or choppy sideways action. You earn dollars and HBAR, dampening volatility. Risk: impermanent loss if HBAR suddenly moons. Strategy 2. Aggressive liquid staking. Use stater HBARks. You stake HBAR, get HBARks, which appreciates in value. Then you take that HBARks to saucer swap and farm with it. This is called looping. Yields can hit 25-30%. Risk: smart contract risk. The hidden gem. Sweet. This uses unique smart node technology. A DEX without smart contracts. The token HSUIT is massively undervalued. If the Hedera ecosystem grows, HSUIT could pull its tanks faster than HBAR itself because its market cap is tiny. Put it on your radar, but allocate no more than 5% of your portfolio. Full technical analysis. Back to the charts. I promised you hidden signals. HBAR, USDT, daily. We bounced off 0.077, immediate target 0.1. This is where the EMA 50 and EMA 100 sit. It's a concrete wall. We need to close a daily candle above this, not just wick through it. If we close above the 0.1, a liquidity vacuum opens up straight to 0.14. HBAR, BTC, the most important chart. Many ignore the Bitcoin pair. Big mistake. We are forming a massive falling wedge. This is a bullish pattern. We've been compressing like a spring for 6 months. A breakout here triggers the arbitrage bots, and that's when we see the green god candles on the dollar chart. The 3, bear case. I won't lie and say it's all sunshine. If Bitcoin loses 65, 0, the 0.077 support might fail. The next level is 0.065. This is the max pain level. That is exactly where I have my leveraged stink bids set, stew leverage. Why? Because below 0.065, HBAR becomes juicy, not just for us, but for the validators themselves who need cheap coins for staking. The calendar, final plan. So we have the full picture. We know about Canary Capital. We know the tech superiority. We know the DeFi strategies. What's coming this spring? The insider calendar. February. Completion of liquidity migration after V0.7. Expect TVL growth. March. MICA. Potential announcement of a European stablecoin. This is the Joker card that could double the price in a week. April. Treasury grants unlock. Possible local correction, which you should buy up. My final action plan, hold position. The HBAR bought at 8 cents, and below I'm not touching. Target, 0.25 minimum this year. Trade position. If we approach 0.1 and see weakness, I trim 20% to buy back lower. Cash. 30% of my portfolio is always in USDT. I am waiting for a flush to 0.065. If we don't get it, great, my main bag pumps. If we do get it, I win double. Friends, we are in a unique moment in history. The tech is mature. The institutions are positioned. The weak hands are washed out. Only one thing remains: your patience. Big money isn't made by trading, it's made by waiting. If this 12-minute deep dive opened your eyes, the best thank you is a like, a sub, and a comment. Right below, I am holding HBAR until, and give me your price target, 0.5, 1, 10. Let's see who has the ambition. Thank you for investing your time and knowledge. See you at the top. Cheers.